Well, if a major purchase is on your horizon, you may be looking at applying for a loan or a line of credit. There are two lending options to consider: secured and unsecured. The decision comes down to your borrowing needs and timeline. With more on the perks and pitfalls of each type of loan, Peter Sashecki from Everything Financial joins us now this morning. Good morning, Peter.
Good morning. How are you?
I'm great. Waiting to see you. There you are. Good to see you. I couldn't say good to see you.
I was here. I didn't go anywhere.
Until I actually saw you. Okay, glad you're joining us this morning. Interesting subject. What are the fundamental differences between a secured and unsecured loan?
Well, a secured loan, you would have to own, you don't have to own it outright, but you have to own property to secure the loan against. And that's a major advantage because you kind of hold all the cards because you have that collateral based on your home ownership, and you have to have a certain amount of equity available in your house as well. You can't be, borrowed right up to the limit of the house and say, hey, give me some more money. There is some parameters around it, but secured is definitely the way to go if you can.
Okay, so I mean, under what circumstance might someone need to take out a loan? I mean, I know right now, like, we're in a really high interest rate environment. How do their interest rates and payment options compare?
Well, here's an interesting thing. A viewer actually emailed in because they were borrowing money to put a down payment on a pre-built, so something they won't owe a lot of money on for 2-3 years down the road, depending on construction, obviously. And it wasn't a lot of money. And they had the equity, but the bank didn't even ask them about equity, didn't even give the secured loan option. Granted, they didn't ask, but as a consumer, they didn't know there was a difference. So a line of credit loan secured right now would be 7.2% on a home equity line of credit. But as interest rates drop, that interest rate will drop. What they ended up getting was a unsecured loan, but also a fixed term. 12.44% is what the bank gave them. And then they found out, wait a minute, we had this other option we didn't even know. And they sent an email in because they're watchers of you and they were furious. And so we thought, you know what, let's educate the people on what the difference is so they know to ask the question. Always ask for secured versus unsecured.
Or at least to be presented with both options so you can look at what each one would do for you and you can make that decision. Because it's important to have all the information before you can make those kind of decisions. So what are some of the examples of projects where you might need an unsecured loan?
Well, large home renovation maybe. This one was an example of buying a potential property. They were helping children, but doing the deposit on a pre-build would be one of those things. So those are just a few of the obvious examples you see. You're doing some bridge financing because you're going to move and you're putting a deposit on another place before yours sells, and that's where you get the money. And a rule of thumb on the home equity line of credit is you need 65% equity. So in this case, the person had a house worth about $1.2 million. They only owed about $200,000. And the criminal part, if you will, Carrie, is they only needed $50,000 for this down payment. So they were well within that 65% window of being able to borrow on a secured home equity line of credit.
Okay, just quickly, Peter, because we're like almost out of time, but under what circumstances would a secured loan be better?
Secured loan. Purchase for another property, home renovation, or a major purchase where you have to buy something like a big piece of equipment or something for maybe your home business or something like that. You want the secured loan. Then you really, Carrie, you want the secured loan anytime you can because there's more options and better interests.
Okay, good information. Peter Sashecki with Everything Financial. Enjoy the rest of your Wednesday. Have a great day.
You too, Carrie. Thank you.